Hi, Warriors. Welcome back to Face. Happy Hump
Ha-
Day.
Happy hump day to you, Dale.
Hey, Blake, and day before Thanksgiving.
Yeah, happy
Thank,
pre-Thanksgiving, buddy.
thank you, Blake. And you know what? I'm thankful for working with the team for the last 8 years or so. It's almost a record for me.
Dale, I remember as I was starting this project and I was leaving Ally Financial and as their chief strategist, and then I partnered up with Steve when I met him in person in Greece, and we're like, okay, we're gonna put this together. And you were the first person I thought about when we did that, and I remember talking to you for the very first time over the phone in my backyard of my previous house, the house that I was in. I remember walking around the pool and talking to you about the Forex Analytics project, and here we are 8 years later. So I'm thankful for
Yeah,
you being on our team.
yeah, and not personalities and egos in this business at times could be issues, especially mine used to be. So anyway, I'm glad.
Wait, you talk like it's in the past tense, Dale.
Oh yeah, I think I've grown, but you're right. You're right. I'm I still have the same chinks in my armor. And you know what else
We all
does?
do. We all do.
The US dollar yen has chinks in its armor, and
Yeah.
you know,
Great call,
I
man.
yeah, I put out a tweet and said, it tried to wear me out. There were a few attempts. I'd have a lead and then it would rally again. I'd have a lead and it would rally again. But my conviction was stronger than my mental exhaustion to stick with the trade. And Jake Bernstein used to call it stick to itiveness, which is an important trait for a trader is that you don't get frustrated a couple times and walk away and say, "Oh, the yen burned me," or the S&Ps, "Oh, that's crooked. I'll never trade them again." Instead of taking responsibility for your trade plan wasn't good. So I hope a lot of guys here and people in our community were on this. Steve also put out prior to the breakdown, he smelled it, chart of the day. So here we go. I think you have to sell rips, maybe back to 53 or so if we get them. And of course, this is helping yields. I mean, yields are the same thing. I'm thinking maybe 4% in the next several weeks. And the Dixie coming off, think we could trade towards 106 and then 105.70 maybe, but I still think there's one more high left. But Euro could push towards 106 first before we get another shot down. And even though the pound's rallying here, I don't think this is a low either. So we have Grega here. So part of my rationale is intelligence gathering with the team. And, I always check Grega's wave count. So, Grega, welcome here.
Hey
Welcome to
man,
Phase. How are
hey
you,
team.
buddy?
I'm
Um,
fine.
what?
Just very busy for the last few
Yeah,
weeks.
yeah, I know you've been doing a lot with crypto and altcoins. Are the altcoins outperforming Bitcoin? Are
Yeah, I
they?
think that there's alt season going on right now because there are a lot of transactions going on when since Bitcoin moved closer to 100,000, some are booking profits, but rather than moving them profits into fiat, they are moving to altcoins.
Okay, so it's like the stock market. They're rotating like from sector to sector, from
Yeah,
coin to coin. All
yeah,
right, well,
exactly.
I'm going to stop sharing and you could take over the screen and we could take a look at your wave counts. I think I saw yours. Maybe it was on LinkedIn that you also thought that in the dollar this could be, even though you're looking for an important top, that this pullback could
Yeah,
be a four with one more push up towards 109. So
yeah. Actually, can you see the screen?
yeah, we got it.
Yeah, so actually, I'm still following this map from 2016, 2017. It was a very similar reaction when won the US elections back then. And we have
Yeah,
seen a very nice move to the upside based on this, some kind of a euphoria. And we have a very similar sentiment right now. But if we look here at the wave structure, okay, and trying to compare it with what has been going on back in 2016, well, I just think that we could be moving into some serious resistance up there,
yeah,
because how the Elliott wave structures are looking. They have 5 waves in one direction, then they will correct in 3 waves. And obviously, there will be a lot of bearish sentiment, pessimism at these levels. And as soon as you see prices picking up, well, the market is now trying to become a bit of optimistic. So I think that that's now a pretty nice resistance area up here that could be met maybe in at the start of 2025. So I think that everything now is driven based on just speculations what Trump could do, but reality can be completely different. So I think that these cycles will still change, and possibly we will already see some top formation for the US dollar at the start of next year.
yeah.
Also, also,
We are getting talk now, and it's what I've been waiting for is the parity talk on euro sub parity.
yeah,
So
but
the market's real, real bullish a dollar here. So that's
yes,
what I want
and
to see.
yes,
Go
and
ahead.
we are seeing euro dollar exactly from especially after these volatile moves that we have seen last Thursday, Wednesday on the euro. Everyone starts talking about bearish euro, how weak it is. But I just think that we have to consider the COT data, okay? And here, if you look at the large speculators, we are actually now at the levels that were seen back in 2022 when euro dollar was much, much lower here, when we have seen this low. So I think that this positioning, it just tells us that we are in a very this late stages of this current drop, and that sooner or later we could turn around. Also, the ECB is obviously still dovish and looking for more cuts, but I think that if we will see euro dollar even weaker, this will be even harder to bring down the inflation. So I think that at some point, even they will realize that euro dollar should at some point stabilize. So I think that euro dollar is also forming a very nice counter trend movement, and I
Yeah,
think that the 61.8% around 102. I'm not really sure if we'll go to parity. I think that maybe there can be a low a little bit earlier here, but
yeah.
obviously it's the mirror picture from dollar index. I think that next year could be maybe a
This could be
turnaround.
a huge wave from C, can't it? I mean, we could be looking at 120, 125. If it plays out this way, and
Yeah,
see,
but you
go ahead, but
yeah,
go ahead.
but you know me. I just
I
try to
know
look
you.
at the
I
market
know.
step by step. I
And you know
realized,
me.
yeah, you
And
re
you know me.
I know exactly
We're a
that
good balance.
yeah, I know exactly that I can be wrong. So I will not
Yeah.
call out some very crazy targets. I will go step by step, but I still think that some rebound next year will be seen, and being
Yeah.
looking for some new aggressive shorts for beneath parity on the euro, I think it's a very bit late. If you were not
Yeah.
looking for shorts up here, then I just think that now you are sitting right at the support. So,
Okay.
um,
Anything else on
Hey,
your mind?
Grega,
Go ahead.
yeah,
I'm going to jump in really quick,
Go
and
ahead.
thanks for joining us today. I want to ask you this. We look, obviously, Forex Analytics, and especially when you're talking to myself or Ryan K-Man, we're always talking about the economic data, the macro backdrop, and I just got out of my euro longs. Literally, I got taken out overnight. I was long from the 104 uh 40 or 50 level yesterday, and I got limited out while I was sleeping, a little lower than where we're at right now. I have a hard time being long the euro for an extended period of time for a few different reasons. Obviously because of President-elect Trump coming in. He's going to hit
yeah,
the Eurozone with a bunch of tariffs. Also, the growth in the Eurozone is just so anemic comparative to the U.S. growth and what we've been seeing and the economic data. Does that weigh on you at all? Do you factor that in when you're using your Elliott wave counts?
Yes, of course. And I just think that now we are in a downturn here on Europe, regarding especially regarding economic situation. This cycle will sooner or later come to an end. It will change. I just think that, for example, US markets just are extremely high. Everything looks so good that at some point, even that cycle there will come to an end. So I just look rather at the markets and focus on them that have a best potential upside based on the current cycle that we are in. We are seeing a lot of pessimism going on for the Europe, so we know what is the next cycle when this one comes to an end. And I certainly think that euro dollar in general and economic situation here will most likely turn around in the next 2 years.
Sure. Okay. All right. Thanks, Grega.
Yeah. Also, since I mentioned the US stock market, I just said that maybe they're a bit like it's some extremes here. So we have a pretty nice wedge patterns here still. S&P 500 maybe trading close to the top, but what's very important is that we are seeing some very serious sell-off on yen crosses. And I've been looking at this correlation, as you know, it's normally the tight correlation, especially in the risk-off mode. And back in July and August, we had a pretty strong sell-off here on yen crosses. At the same time, stock markets turned to the downside. And now I just think that if stocks are really here in very late stages of this trend, then I just think that the yen crosses could continue much, much lower. So maybe just temporary sideways, some just temporary dip on stocks could be enough to send yen crosses much lower. I think that CAD yen, Euro yen, all of them are looking very, very, very bearish at this stage. Here's CAD yen, very nice, strong resistance around 111, could be even some kind of a right shoulder here. So I think that we are going to revisit those levels here around 102. We have Japanese yen coming to the upside aggressively. And if stocks, as I said, will turn down, I just think that this thing will accelerate lower.
So stocks are the last domino, right?
Yeah, I mean, metals for me, if
Or
I
the
can add,
first.
metals already reversed. Some will say that gold is going back
I
to.
agree with that.
Yeah, I mean,
Greg, I liked the pullback, and it looks like we could get new highs here. Could we?
I mean, firstly, I still think that we have room for 2,400. I mean, if
Yeah.
you look at gold from the last 2 weeks, everything looks like we have a very nice rebound. We could go back to all-time highs. And then you look at maybe at silver, and you see completely different picture.
Yeah.
So I just think if we have silver still looking very weak, if we have Chinese yuan that is still looking very weak, I just don't believe that we have. These are all indicators for me that I have to be very careful with gold, because if dollar Chinese yuan is still going to target these highs here, I just don't believe that gold will revisit the highs.
Do you track the gold silver ratio? Because it looked like a little breakout last week.
Yeah.
Over 86. Looks like we could trade 92.
I mean, gold silver ratio is another indicator in which phase we are in metals, right?
Yeah.
And you can see that there was a very nice bull flag here on gold silver ratio exactly when silver put in a top here. So as long as this one is trading to the upside, of course, metals may not be in uptrend, rather they're just in consolidation. But that actually tells us that silver is the worst performer here compared to gold. So everything to me, it looks like that we are in consolidation, and that even gold at some point could still retest the lower range of this ongoing fourth wave.
Okay.
Maybe finally, before you take over, or Blake, so here the final thoughts regarding Bitcoin. Keep in mind that now when we have this euphoria going on, always good news will occur at the end of the bull runs, okay? Because if over optimistic, and then if some news, some outcomes, especially if Trump will not deliver what he's promised, then and what he thinks about cryptos in general, then it can be even more catastrophic for prices. And we have to realize that bull run on cryptocurrencies is not happening now for the last 3 weeks. It's been here for since 2022. So definitely, I think that we are in a very late stages here. Okay, so I think that Bitcoin could actually form a very important top in 2025. If we look maybe at some cycles here, I think that there's a pretty nice time projections. So here we had this 20 weeks of recovery from that lows. Then we got 22 weeks of a consolidation. Then another 26 weeks of a bull run, 21 weeks of consolidation. So if we respect the impulsive reactions and consolidations, then we can come out with a projection that for potential top between end of December and end of January. And that's exactly when Trump will took office. So I just think that there is going to be very important reversals potentially on cryptocurrencies happening in 2025. But I still think that for now we will see 100,000 level broken. We have these liquidation orders, meaning stop losses are being built here around 800,000. You can see the yellow color represents actually that there are a lot of stops up there. So market maybe now makes a pullback. 85,000, I think it's a very nice support, and then potentially we need to clear those out before maybe we get a real reversal or some limited upside. The
Nice heat map.
The final thought, exchange outflows. These are very important as well. So for now, what we see, there are a lot of exchange outflows. What it means that there are a lot of transactions from exchanges to private wallets. This tells you that there is a lot of optimism going on. So everyone believes that Bitcoin will continue much, much higher. That's why they want to hold their Bitcoins on private wallets. But whenever this is just moving into some extremes, and if we at any point will maybe pass the previous spikes here, the previous levels, previous readings, then this will be another indication that we are in the very late stages before the potential reversal.
Okay, so MicroStrategy should be a great short next year.
I mean, great short. I would not be buying it here. That's my.
Yeah, I mean, especially what I'd like to see, Grega, is some of your higher targets being achieved. Like 126 was a measured move off the flag, or whatever it was, a handle of a cup and handle. And if MicroStrategies is not making new highs with Bitcoin making consistent higher highs, that's going to be a real big market tell for me.
Yeah,
for shorts there.
Markets definitely will not continue higher with this same magnitude forever. There will be some massive reversal to the downside, and it's totally normal to see some 30% pullback, if not more, on Bitcoins in just a very short period of time. And that's something that traders have to realize. So if someone bought Bitcoin, let's say around 50,000, I just think that don't be over invested right now, right here at these levels.
Yeah. Okay. All right. Well, thank you, Grega, for dropping in.
Thank you.
And Grega's work is part of the team. He's our Elliott specialist, Elliott wave specialist, and want to bring in Ryan. And Ryan, I know that you call Thanksgiving Christmas before Christmas in the U.S.
Practice Christmas.
Yeah. You doing anything in front of markets really thinning out for the last couple days? Here of
Not at the moment. I'm going to keep an eye on these month-end flows. What I was explaining on the flow show is that if you do get some wild moves and you see moves that are counter to the fundamentals, for example, euro dollar rally into 106 or something, then those are the sort of opportunities you got to look for. So that's what I'm looking at, seeing if things get kicked out of kilter, because there's no reason, like you said, there's no reason to be buying the euro. So if it rallies, you've got to keep one eye on that and think about the possibility of a counter trade.
Yeah, we're like 106.
Yeah,
you have a level there. Okay, yeah, go ahead, Blake.
No, I was just going to say, and we have so much data coming out in, like, literally, if you're looking at the dump that we have in data, Durable goods, continuous claims, or weekly unemployment claims,
PCE.
PCE, yeah, GDP. I mean, we got Chicago PMIs, PCE a little bit later. I mean, it's just, man, there's so much data, which, maybe that's the catalyst that drives us to 106. But you were just talking about 106, Ryan, and the euro. Do you want to finish your thoughts there?
Yeah, I was just saying, we were talking about this when we were coming down. 106, 106.10, 11 is a fib level from I think it's from the 112s. I can't remember. I'll have to look at my chart. But yeah, 105 was a big level. 106, when we hit 105, we couldn't get through 106. So yeah, that's the next level in play. So yeah, big level.
And just in case things get going, and I'm going to delete some of this stuff here because it's really kind of messy on my charts. This is the high, the big double top we had, the bear flag completion, the stop out on I guess it was last Wednesday, Thursday, when we gapped, and after the Eurozone PMIs. Anyway, a 38% retracement takes us all the way back to 106.60, just in case things get a little squirrely over the next couple of days. And I'm gonna just ask K-Man really quick, because he's, like I have been saying all week, he's the most experienced in trading around flows, because he had been on a bank desk for nearly 30 some odd years. And K-Man, we're gonna have a messy one, as you saw yesterday with corporate month end for the dollar. Here we are, holiday week, lack of liquidity, and just a few paltry days over the next couple of days to finish off these flows. So how do you feel about the euro here?
Yeah, I think if everything else is respected, I think we could close the dollar on a bit of a low this month. But again, I mean, I'm very cautious still because of that Thanksgiving in between, and obviously, as you say, we have this whole slew of data coming in that potentially kills all the end of month interest. But the of what I thought as well, and the banks seem to confirm the models that it's a pretty decent dollar selling month this month. But then what happens afterwards is the other question. So I do think that over the next couple of days, because we saw a bit of a weaker data point this morning out of euro, and the market completely shrugged it off because they're trading a different thing right now. So yeah, you should be dollar selling, but always take it with a pinch of salt when there's holidays and stuff in between.
I want to ask you this really quick, and I want to look ahead of this weekend. I mean, we want to get past Thanksgiving, and now we get into December. Now we're going to be dealing with end of year flows, and when you have years like we've seen. I mean, this is crazy, guys. I wish, I know a lot of you guys are younger, but to see a 30% move in equities in a year. Dale, how often does that happen in your 30 plus year career in equities, understanding the markets, since the 80s? What do you think about that? I mean,
I don't think it's ever happened.
Yeah. I mean,
we're up
30% for the year.
Unprecedented.
Freaking year. Okay, so what does that mean for end of year flows? I'm asking K-Man here. What do you think that happens there?
Yeah, I mean, the only thing that we need to keeping in mind right now is that money managers don't manage their flows as they used to do, like concentrated in one go. They are much more hedging dynamically. But look at what happened last year when we had a big year on equity markets as well, right? Look at what happened last year and the end of the year, and I think there's a risk that we see it all concentrated now into 1 month. So I would be very careful and make me have the choice, or make me choose a direction. I think it's going to be bearish dollars as well into year end.
Yeah. I mean, because you're gonna get people that have to sell dollars, move into, they have to play catch up. They have to, stay up with benchmarks. We were having this conversation with Simon in the chat room. And by the way, if you guys aren't in the Forex Analytics chat room, I just need to mention that this is where all the great conversations have. If you do not have conversations with other traders, K-Man, Ryan, myself, you can have, all these side conversations about, where we're feeling the markets might go and how we're feeling, and everybody's, talking about directions. And if you're not having those conversations, you should be in our community. Our community is the most active, and it's $1 for 10 days. Try it out on Forex Analytics. But we were talking about, these flows going into the end of year, K-Man. And, we've seen just unprecedented moves in equities where we could see them, you could see those several hundred pip moves in currencies as, Simon was like, well, if I was, an asset manager and I'm up X amount of percent at the end of the year, I'm going to book profits. But the real question is, will you? Because if you're not keeping up with a 30% return or a 20 some odd percent return like other indexes, how can you book profits if you're not keeping up with them? Because you're going to just have redemptions next year, right?
Yeah, that is true, but at the same time, money managers do have to close the year and rebalance books because they have standards of trading. They have methodologies. So if they are overexposed, because that's the choice, they have the leeway within certain frameworks. If they're overexposed, or if they, as a result of big rewards in, let's say, for example, the S&P moving up 25-30% this year, if you are an FX neutral fund, you will still have to balance your FX flows, whether or not you like it, because this is how their models are ruled, and that's where sometimes we see those flows come out of the blue, or it's just because those people respect their own rules and they will still need to rebalance something. And perhaps they will do some window dressing into the year end, and then they put it back on start of the year. Look, I think last year was a prime example of it. We had like literally 3 months of dollar selling and equities ramping up because they were all running behind on schedules, because nobody believed in 2023 that equities would go up, so they had to buy. Well, I mean, this year we could see either a remake or a reversal. I don't know, but they will, according to what their models say, they will have to do stuff.
Yeah. All right. Thank you for all of your answers there and your thoughts. And we're just a few minutes away from data. We have a huge data dump. I don't even think it's going to fit on, one of the tools that you get with Forex Analytics is this data flash. I don't even think we're going to be able to fit it all on this one page. There's so much data being dumped. Yeah, you have to kind of scroll down to see it all. Real quick, last minute thoughts as we are coming into this data. And by the way, we're getting set up here. Ryan, what are your thoughts?
Yeah, I just want to keep an eye on this data, okay? Because we're getting the Q3 GDP revision, which contains PCE numbers, but we also get the monthly October PCE data. That's separate. That's in the income and outlays survey. But that's slated for 3 o'clock, so 2 hours, hour and a half from now. It's usually out at the same time. So I've got a calendar that's got half the October PCE out at 1:30 and 3 o'clock, and half of it as the other way around. So I'm not sure what's going on with this data and the PCE number. So it looks like a cock up somewhere along the line, which might cause an algo wobble. So just be careful.
I was seeing that too. I was like, PCE comes out a little bit later. Is that really true? Anyway, thank you very much. We're 30 seconds out. Dale, any last minute thoughts?
I'm thinking of Turkey.
Me too.
I love Turkey.
All right, guys, we have yields on the left, dollar index in the middle, S&P to the right. Remember, we're only just a hop, skip, and a jump from all-time highs. Let's watch this data, and let's look for U.S. exceptionalism. Let's see if that's still sticking around. And it's going to be a messy one here. All right, here we go. There we boom. Jobless claims seem good. Wait, no. Everybody's
Well, we've got the GDP number. That's okay.
all right. I'm
We've
looking.
got the durable goods. That's out.
Seems a
We've
little
not
messy.
got,
Now.
yeah, we've not got the PCE numbers. So maybe they have booted that to 3 o'clock and changed it or something.
Dollar's selling off a little bit,
Yeah.
and I'm still looking around on several different locations for data, and I'm not seeing it all. Durable goods came in weaker than expected. Unemployment claims came in line, basically. Wholesale inventory is a little worse than expected. Preliminary GDP price index, still waiting on that. And that came in a little hotter than expected. So overall, yeah, I would say it's a kind of a wash here as far as data goes. But the dollar is a little bit weaker. Yields are coming off, and stocks are, I guess no reason to really not hit all-time highs today. Ryan, did you see that core PCE come in? I still, it looks like it's coming in an hour and a half from now. And with
Yeah,
the
it looks like it's not dropped yet. So maybe they have punted it. Don't know why.
yeah. Well, because I think they don't want to overload the market with so much data all at once. I mean, it's bad enough that we're getting 5, 6 key data points in one day, let alone, slap them all at us like at one time. Although I would have rather taken it like a garden hose or a fire hose, just throw us the data so we can go enjoy our weekend. But
We have a new guest today, Blake.
we do. Is that guest here?
Yeah, Michael
Oh, okay.
Berman from Down Under.
So before we bring in Michael from Down Under, let me just mention this. First of all, I'm very thankful for all of you all being here. So thankful that that until December 2nd, and Greg is going to be doing the week ahead video, by the way. I'm super excited about this. But December 2nd, at the end of the day, that is Monday. If we are running a cyber truck special. It's a Cyber Monday special for trader funding program, 30% off. We've never done that, and it's only good until Monday. 30% off trader funding program assessments. Make sure you inquire for more for more information. With the volatility that we're seeing, this is the way you take advantage of it. So, Cyber Monday sale. It's coming. It's active right now. Our banners will be up over the weekend. Take advantage of it. You won't see that for the rest of the year. 30% off. 30% off assessments. Anyway, guys and gals, I am very thankful for my entire team here, but I'm equally as thankful having you all listen to us every day for the last 8 years. Dale, thank you so much for guiding us. Ryan, K-Man, keep kicking ass on the Flow Show. And Grega, thank you for providing your analysis. We get it every day on the Elliott wave analysis here on Forex Analytix, but not everybody gets to see your analysis every single day. So thank you for being here with that today.
Okay, listen to what
Cheers,
Laura's
guys.
saying. Hey, listen, Dream Team. I know I'm thankful that you guys joined Forex Analytix, came in, and Ryan.
Yeah, and you have a safe and wonderful Thanksgiving, Dale,
right.
Blake, and all the rest of you Yanks. Don't eat too much.
Okay, I plan to eat a lot, man, nonstop, and I'm on the seafood diet. Blake and I share that diet.
I see food and I eat it. Yep.
Yeah, so
The old ones are the best.
have a great holiday, Blake. See you
Hey,
next week.
You too, and guys, just we're kind of up in the air if we're going to be broadcasting. I know the Flow Show will be broadcasting on Friday. The F.A.C.E show, we're still trying to work through it. So, be on the lookout. For those of you that are trading around this half week, I mean, the markets will be open partially on Friday. So the F.A.C.E show might be broadcasting. Just keep an ear out, and if not, I will catch you guys on Monday for sure. All right.
Look what Laura. I want to thank you for what you said. Laura's saying everyone been here for the last 4 years. I'm a graduate in economics, worked 30 years in a family exchange, and never learned as much as I have here with the best team and community I could have run into. Surf the net, comparing, investigating, following many, shut down in 2020. Dale, Blake, Steve were far the best. Said it already. Humble, born teachers, mentors, sharing every single aspect. Thank you, Laura.
Thank you, Laura.
Yeah, and your diploma is in the mail. Your 4-year F.A.C.E Forex Analytix diploma. And now I have the pleasure of introducing the community to Michael Berman. Michael, welcome to F.A.C.E.
Hi, Dale. It's very nice to be here. Quite excited.
Yeah, I know you're burning the midnight oil, right?
Gee whiz. It's what's the time? It's 25 to 1 a.m. in Sydney, Australia at the moment.
All
And
right.
it's amazing. I had a webinar last night which was at 4 a.m. So it seems like we're on the arse end of the world, and yeah, it's all
It's
good.
really great to meet you. And Michael
Likewise.
reached out to me on LinkedIn to
Yeah.
check out his letter, and it's called Signal to Noise News is his handle on X, right?
That's it.
Okay.
I must tell you, Dale, you're the first person I've ever engaged with on Twitter with a DM. So
Oh,
you're quite the master at that. I'm more old school than you there.
all right. Well, you know what? Here's what I was thinking, and that's how ironic life could be. I go, well, Michael's reached out to me a couple times on LinkedIn. You know what? I'm gonna put him on the air and give him some visibility. And then I'm looking at your stream,
Yeah,
and you're one of 3 coaches recommended by Peter Brandt, which is a very strong recommendation when he doesn't give people the
yeah,
nod. I've interviewed Peter. I've met him. I know Jack. I've interviewed
yeah,
him. So
yeah.
congratulations on being held in
Oh,
high regard by him.
yeah. I met Peter a number of years ago, about 6, 7 years ago. I was invited to give a talk at the CMT symposium. I think could it have been the 50th anniversary or something like it. Was quite one of their big milestone symposiums on Wall Street, and I gave a talk there, and yeah, we struck up a friendship, and I think I presented some statistics that he had never seen before, and it kind of grabbed his attention. And yeah, we've been chatting ever since. And yeah, he's the real deal. I tell you, if anyone can trade half as well, not even a half, if you can trade a tenth as well, you're gonna knock it out the park as Peter. If you can
Yeah,
mimic
he,
Peter.
there's nothing real fancy about what he does.
No,
He's really a classic technical guy.
yeah,
And we talked about trading methodology of how he likes to take partials and move to break even as soon
yeah,
as possible to take all the heat out of the trade. So why don't you tell us a little bit about your journey, Michael?
yeah. So
Who do you blame for you getting involved in this business?
okay, well, I'm actually going to blame my mother because I started I start, I started trading when I was 13. Took my bar mitzvah money, and my mother was a bit of a gambler, and
Okay.
and I remember I bought a manganese mine. I remember it was called Samancor, and I did very nicely. And from then I was pretty much hooked. But I'll just take you through my journey. I think I've covered so many different aspects of the industry. I really feel like I've seen. I want to say I've seen it all. Obviously, I haven't seen it all, but I've seen a wide variety of this industry. So just by way of my background, I, I I actually started off in the corporate real estate world, and I had a really good career at an investment bank and all that kind of stuff. And I was motivated um, to I just wanted to do something that was not reliant on management, that it was like the ultimate meritocracy where I could be
Yeah.
rewarded for what I did, and I didn't have to kiss ass in the corporate world, just that kind of stuff. So anyway, I managed to convince this investment bank to set me up on the proprietary desk, and then this is in 2001, and I was kind of hooked since then. And interesting, I saw your earlier analysis, Gregor's analysis of Elliott wave. I think I've made and lost more money with Elliott wave. I'm not knocking Elliott wave. I think I probably gave 20 years of my career. I was either a closet Elliott waver, or I was a very vocal Elliott waver. So it was actually very nice seeing those wave counts. I haven't done it. I haven't traded Elliott wave for a number of years. But anyway, I started trading on a proprietary desk. I then managed to set up my own hedge fund, manage money with institutional money for a while. I'm South African born, but been in Australia nearly 20 years. And when we moved to Australia, I started just managing high net worth individuals' money.
Yeah.
And basically did that for a fairly long period of time. Let's call it 10 plus years. And I'd like to say I was the best trader. I don't think that would be a fair assumption. I had good periods, but I made classic mistakes along the way as well, where I gave back, too much in drawdown, and had to deal with all those kind of consequences when you got clients withdrawing funds and all that kind of stuff. But also had some incredible years, and I've been able to, thank God, live a very nice lifestyle based on eating what I've killed, for want of a better analogy. But what happened in 2012 was I'd been like, let me call it, I'd been seeding with, I had a very wealthy partner that was a bit of a gambler, and he liked to allocate money to traders, and he had no process. He loved, if somebody came with a good story, straight away he transferred money, and you were up with a few $1 million, and you were trading. And I said, well, let's do something a little bit more systematic. And in 2012, I set up a company called RAPA. It stood for Risk and Profit Analyzer, and basically it became an online incubation platform for traders. And we raised about $60 million, and I had I was the CEO and co-founder, and I had two other partners who were mathematicians. So we were 3 PhDs, and we developed a proprietary scoring metric, which we called the RAPA score. And basically, for want of a better word, I'll call it a super duper Sharpe ratio. And we really believed in this, and we allocated money based on your RAPA score. And we allocated money to people all over the globe. One or two original second school of turtles. The one name that comes to mind, Ken Jabersack. I don't know if you ever came across him, from Chicago. And we had a number of guys, and we then we actually, I'm going to jump forward a bit, because we partnered with Jack Schwager from F.A.C.E at the time, and it went its own course. We exited, and I won't go into all the gory details of that. But this is now end of 2015, 2016. I had this like vision of building the world's first robo trading coach, and we needed data, and I managed to convince a number of brokers to share some of the data. I knew I couldn't build the ultimate strategy that would be able to produce alpha, but I knew that if I mined enough of the data, I could find patterns that would, let's say, describe mistakes that traders were making. And I was also able to identify where people who were profitable, what are some of the characteristics that they did? So the company was called Psyquation, stood for psychology and equations. Myself and my partner Vlad, a Ukrainian guy, we developed the technology, and startups are hard. It was a new idea. I got all the major, let's say, CFD brokers became partners of ours, and all the big names came on board. And then one particular broker said they wanted to acquire us, and we were acquired in 2018. And I had a 3-year contract with the sale, and the corporate world wasn't for me again. Like, it was lovely in the first 18 months. I enjoyed having a balance sheet. Here was a guy who was, bootstrapping and all that kind of hard yards. We had a team of 25 developers, so feeding everyone was tough, and it was all. I'd like to say it was all on my shoulders. We had, I had partners, but it was hard. Yeah, somebody saying South African English. Yes, that's me. Was born and bred in South Africa, been in Australia nearly 20 years. And then while I was running this software platform, we had over 50,000 live accounts connected to our system. So it was like this living, breathing organism that was sucking in data and learning, and it was pretty impressive. But at the same time, we also developed a score. It became the Psyquation score. It was a totally different approach to the Rapper score, which was a top-down. This was a bottom-up, and I took over the running of the incubation platform. I set up what's called Axie Select, and seeded well over 100 traders with capital. I'm sure lots of your listeners or your community members would have been, let's say, potential candidates for this. And basically, if you had a Psyquation score that met a certain criteria, you got money. It was a very streamlined process. Nothing like, you didn't have to pay for it. It was nothing like the these prop arcades where people are buying money and they keep 90%. I don't know. To me, the numbers don't make any sense. Like, who's going to give you 90% and take all the risks? So it's clearly it's a Ponzi scheme. And I'm not saying to people who are looking for capital that they shouldn't use those facilities, because you might be able to make some money and all that. But it's certainly not something that I'm a great believer in. By the way, Peter Brand's very, very anti that space.
I've seen his tweets.
He gets quite worked up.
Yeah, I was looking at your charts in your stream, and I haven't seen charts like that. And I'm wondering if you could put a few up.
I'm going to share
very
my.
interesting. Yeah, go ahead, Mike.
I'll share my screen.
Okay, got it.
Cam, just to confirm, I just want to know what you guys are seeing. Are you seeing a tape?
Yeah, signal to noise up on top, macro tools, newsletters.
Okay, great.
Is this your website?
Yeah, this is the website. Just
okay.
I'm starting out, so if you get to get my daily newsletter, it's free. Just free is a good price.
All right.
With Black Friday, everyone being touted around here. So are you referring to, I'll just show, when you say like these charts, or were you saying like some of the other stuff that I was sharing?
Well, what you had on your Twitter feed.
Yeah.
Yeah.
So what I'll do, I'll just actually highlight, I'll go to today's letter actually, where
okay.
I think you kind of,
there you go.
So
yeah.
So
I couldn't read all the writing on it, but
okay. Yeah. So I'll just tell you what's going down on, not down, going up on this one. So this is the S&P. This is the S&P 500, right. And it's had a 7-day streak where it's gone up 7 days in a row, and basically it was 70 days since the last time it went up. And if believe it or not, looking at 50 years worth of data, it's done this 100 times. And if you held it, so in other words, if after a 7-day streak, if you held it for 5 days, you'd make 0.1%. If you held it for a month, you'd make 1.7%. This is taking 50 years worth of history.
Okay.
And basically it's looking at those 100 counts, and it's doing, it's just doing all the statistical analysis for you. And if you held it for 3 months, etc., etc. And this is, it won 55% of the time. It lost obviously 45, but this is what the average win was 0.9%. The average loss was 0.9, and you can kind of see the statistics. So there's positive. If you traded that, there would be positive. It's not taking commissions into account, but obviously if you're holding it for a longer period of time, I'm not saying this is. This is my whole idea behind signal to noise, is that this is a signal beyond the noise. When you've got 100 samples, and you've got
plenty of evidence. Yeah, plenty of evidence, right?
In fact, just one particular one that I highlighted the other day, just want to share.
Okay, the gold.
Way, I do like to poke a bit of fun at the establishment. Just so I can't remember who, some big name in the industry was making a big thing about gold going above the 50-day moving average. So I said, okay, so what? And I did some analysis, and basically what I did, I want to just see how far I went back. Okay, I went back to like 1980 odd. And what I did is I said, okay, if you sold gold when it was below the 50-day moving average, and you only held it when it's above the 50-day moving average, over how many years is that? That's like 40 odd years. How much would you have made? You would have only made 80%. Whereas if you bought and held, you would have made 760%. My point being here is that you actually made all the money. The strategy, gold made almost all of its money when it was below the 50-day moving average. So
interesting.
My whole thesis is, don't get carried away by loose talk when people throw around big or exciting.
Because that's noise, right, Mike? That's noise. What you're saying.
Absolutely. So I'm saying, I'm correct. So if I went back to my I also use charting software, but if you look at on my site under the in the chart gallery, you'll see everything here is very clean. There's nothing on here, and it's just a line. I'm looking at 1 year, and it's very different to obviously where you're looking at Fibonacci, trend lines, wave counts, and all that kind of stuff. And I'm not knocking all of that, because it has its place for whoever uses it, and if they use it well, good for them. But in my
case, not the car, it's not the vehicle, it's the driver.
Exactly. So once again, like, here's that theme of signal to noise. I find it very noisy to see too much on the chart. So I just, what I do is, if I looked at it, this is just looking at 1 year. And I try and say to myself when I'm looking at this, like, what is this chart? What do I think is likely to happen? Now, obviously, there's bias in when I make an assessment on that. But I mean, I'm just sharing with you some of those things. One of the things that I think is really important is what I do here is, by the way, those charts are all handcrafted in Python. So basically, I've coded it that it's very quiet and what's the word I'm looking for? Like, I try and stay away from getting too excited because this person said that and that person said that. It's important for me to be very focused on my process. Anyway, I just wanted to share that. If I maybe just to complete where I get to this journey, because I'm close to there. I didn't finish off, and I know that we're probably running out of time, and I don't know if I'm boring your audience with my background, but
it's
hard to
an
tell when
excellent,
you're
it's excellent, Michael. Go ahead. People,
it's
you know what,
hard
you asked that. People are going, how do we reach Michael?
Oh,
Repeat
really?
Michael's
Okay.
Twitter for me. So,
Okay.
you
Well,
know,
yeah. So thank you. Well,
all right.
it's you know, maybe it's a good time to so when I sold Psyquation and I did my time, I'm sure some people listening are here in doing time. Like that's what it felt like, to be honest with you. It felt like I was doing time, and it was a very nice job, but it was too corporate-y for me. So an old partner, the guy who liked to allocate money to all these traders, said to me, Michael, come on, let's go again. Let's do something together. So I said, okay, but I want to be the broker this time. So I set up a MT5 broker, CFD broker. It was called Ditto Trade, and it was, the whole idea behind it was, yes, we did broking, like you could trade the futures and all this kind of stuff, but the whole idea was copy trading. Well, it was to make people become fund managers and get capital behind them, because I'd successfully run Axie Select. We had allocated money to people we had never met. We just had this algorithmic process, but we had really good money management on top of it. And we made money, even though these were retail traders who had very limited experience, and many of them blew up, but we still were able to, as a group, as a pot, make money. So basically I set up Ditto Trade, and yeah, starting a new, once again, startup, tough, all those kind of things. I mean, what I was paying in market data fees, I'd never been the broker myself, always worked with the broker. And before I knew it, I think I was paying $10,000 a month in market data fees and all this kind of stuff. It was very expensive. And my partner, Lance, at the time said, why don't you just meet this guy who runs one of his other brokers? Anyway, I'm not going to mention the name. You can look it up. But they acquired me, and I became the CEO of this broker. It was focused on the Asian market. And it was all good in the beginning, but me and this particular guy didn't get on well. So it ended in a business divorce. And then I kind of, at the same time, just have to add this because it will just give you some color in terms of who I am. And when Vlad and I both left our corp, once we had sold Psyquation, we set up also a high frequency market making business called True Alpha Ventures for the crypto market, basically trading, market making for Bitcoin futures. And 3 years of development, I'm telling you, it was hard as, and still hard. And we trade a lot. I mean, there we put in maybe 3 orders a second. So that business was acquired earlier this year by a company in Melbourne, company called Zero Cap. Some of you guys might have come across it. Anyway, so I've got a broad spectrum of covering the markets. I'm writing every day about the markets. And
so what's your business model? What are you looking for? Subscribers? Or are people to coach?
Yeah, so thanks for asking that. So my business model is, I've got one sponsor at the moment, a company called Trade Nation. You know, with all these companies, the one thing when you sell a company is you sell the database and you sell the clients and all that. So from Psyquation having like 100,000 people, I started with one, my mother. My mother was my first reader, still gives me a daily commentary every time she reads it. So yeah, I've got one sponsor.
Did your mother churn herself in the market? Oh,
My,
Michael, come on, tell me.
no, my mother's the most professional gambler you'll ever meet. She's a world-class bridge player. So
Okay.
funny,
Yeah.
my father was a doctor, and he taught me how to do technical analysis. Like I said, he was very into technical analysis and charts,
Yeah.
and he had all the when he got home from surgery, he was checking out the charts. So
Bellies.
yeah, it's
Yeah, so you had like mentors. You have it in your DNA.
yeah. Look, what people say, like, because living with risk is trading is all about dealing with risk and accepting that you're going to lose money, because without losing money you're not going to make money. So it's that kind of mindset. So Dale, in a nutshell, my business model going forward is yeah, I'd like, the more people that subscribe the to my newsletter, the more evidence I've got to go to sponsors and say to them, guys, because I would like to keep it free, and that's my intention. I've developed a coaching approach. I've got one story, if you don't mind. Am I over time?
No, go ahead.
Okay. So when I started trading in 2001 professionally, I'd read the Market Wizards books by Jack Schwager, and I came across this guy, Dr. Van Thorp, and it was very interesting to me that he has a trading psychologist. I'd never heard of a trading psychologist. Anyway, I was living in South Africa at the time, and I said, I want to be the best at what I'm doing. If the good guys are getting trading psychologists, I'm going to get one as well. So I phoned the Medical and Dental Association in South Africa and asked them, can you put me in touch with a trading psychologist? They said they've never heard of such a thing. So anyway, they put me in touch with this one doctor, and he said, look, he doesn't know, this isn't his field, but he wants to put me in touch with this one guy. Anyway, I called this guy. Turns out he's a sexologist, but he became my trading coach for the next 10 years. So it was quite funny that I landed up at a sexologist for trading. But he was a peak performance coach, and he said he could help me with my trading. So anyway,
peak performance, huh? Okay, wow. All right. Yeah, I like it. Without chemicals, right?
Yeah,
All
exactly.
right.
Exactly. With the
Anyway,
mind.
what's his phone number? Anyway, anyway, Michael, really a
Thank you.
pleasure meeting you.
Thank you, Dale.
And yeah, I'd like to have you back, and we
Yeah,
could
thank you.
do this again. And
Sure.
so people, this is free.
Yeah.
Best way is just to go to Michael's
Yeah.
website, signal to noise
Noise.
dot
Dot,
news dot com.
no, just .news.
Oh, .news. Okay. And I'm
Yeah,
glad our paths crossed. How's that on
absolutely.
LinkedIn?
Thank you. And I've thoroughly enjoyed. You can see I've spent too much time in a closet that I need to get out a little bit more.
Oh, well, a guy told me early in my career, said, Dale, make your money in the closet. In other words, don't flash it, right?
Yeah, that's
Stay quiet about it and drive an old car. Probably never been more important now. You don't want
yeah,
to be a target. But Michael,
absolutely.
really,
Thank you.
after going through an interview with me, you're now my trading warrior brother.
Okay, awesome. Look forward to spending more time.
Shalom, Michael.
Take care. All the best. Shalom.
All right. Michael Berman, everyone, check him out at Signal to Noise News on X, and go to his website. It's free. I'm going to do it. And all right, Mike, and keep in touch.
Take care.
All right, buddy.
Cheers, mate.
Michael.
Bye-bye.
All right. And
Bye.
everyone have a great, if you're here, an American, have a great Thanksgiving.
Happy Thanksgiving.
Enjoy the quiet time before the inauguration. Anyway, it's already, looking forward to trading a Trump tariff tweet market, Michael.
um, yeah. I think inflation's on its way back. So
Okay. All right. All right. So we're going to have some great commodity markets and a tumbling dollar eventually, right? All right.
Yeah.
All right.
Okay.
Mike Berman, everybody. I'm glad I met him and I'm glad I brought him to you. Check him out. That's a wrap for me. Remember, don't just count your pips, count your blessings. And if you're here, that means you have risk capital to trade. So be grateful. A lot of people do not have that and are trying to make a decision between medicine and rent. So again, I'll see everyone. I'm not sure if I'm going to be here Friday or not, but for sure Monday, we'll lay it all out on the court again. Adios, everyone. Take it easy. You're very welcome.